Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Tuesday morning, lots of cues to digest. But the most important one being we have a new RBI governor whose 3-year term will start tomorrow. That's the 11th of December. Sanjay Malhotra. Well, he is an IAS and a computer science graduate from IIT Kanpur. He holds a master's degree in public policy from Princeton University, US. And with a career spanning 33 years, he has worked across various segments, including power, finance and taxation, information technology, mines, etc. And of course, he will be replacing outgoing RBI Governor Shaktikanta Das, who's the second longest serving RBI Governor in the history of the central bank. Of course, a salute to the outgoing governor as well, given the fact that he has steered the Indian economy through some of the toughest times like the pandemic and, managed to, maintain Indian growth rate at somewhere around 7% and, of course, also managed to, keep inflation under check. So yes, a tremendous job there. A 6-year tenure happens to be the second longest by an RBI governor. Of course, we will be digesting this news flow plus the fact that we are working with mixed global cues this morning. Wall Street saw a tepid close. In fact, indices retreated from record levels, but Asian markets are fairly upbeat on hopes of Chinese stimulus, which has kept oil prices as well buoyant. GIFT Nifty hinting at a mildly positive start for our markets. So let's see whether or not we manage to reclaim that 24,700 mark, and even perhaps look at reclaiming 24,800 in the coming sessions, as that happens to be a key resistance zone on the upside. But of course, lots to digest, lots of stocks to watch out for. Your stock related queries will also be in focus, so keep them coming in on our live feed. We'll try and take them up. But of course, before we move any further, let's quickly take a look at the top headlines at this hour. Wall Street retreats from weakness in technology stocks. Nvidia falls on news of China investigating the company over violations of the country's anti-monopoly law. Asian markets trade mixed following a mixed handover from Wall Street. Stocks in China and Hong Kong surge on the announcement of proactive fiscal measures and a looser monetary policy in China. The GIFT Nifty is suggesting a higher start for the Indian market. Brent crude rises above $72 a barrel as China signals a looser monetary policy going ahead. Meanwhile, gold prices hit a 2-week high as the Chinese central bank resumes gold purchases. The likelihood of a Fed rate cut also boosts prices. And the suspense is over. Revenue Secretary Sanjay Malhotra has been named the next RBI governor. He will serve a 3-year term starting the 11th of December. Shaktikanta Das's 6-year tenure as the governor ends today. Well then, let's take a look at the cues for trade then. Yesterday we ended the day with minor cuts. In fact, we've been fairly listless. We have been volatile, yes, but we've been fairly listless over the last 2 sessions. Nifty has been struggling for direction. Volumes have been thin. However, the good part is that the broader end of the markets have been outperforming, with the Nifty mid and small cap indices extending their gaining streak to a 12th straight session yesterday. So, broader markets doing well. The breadth has also been in favor of gainers all this while. The Nifty Bank Index ended off the day's high. It did manage to, edge back into the green at some point of the day, but gave up most of the gains and ended the day in the red. FMCG, that was the big drag yesterday after Godrej Consumer's weak update for the third quarter. But IT stocks staged a good comeback towards the fag end of the session on the back of a positive report coming in from HSBC, wherein they have upgraded some of the counters like Infosys, LTI, Mindtree and the likes. IT of course will be in focus today as well, and so will be metals on the back of hopes of a looser monetary policy in China going forward. Put call ratio on the Nifty dropped to 0.9 vis-a-vis 1.03. No new additions or deletions from the F&O ban list. However, a couple of counters, in fact 4 or 5 of the counters remain in the F&O ban today. The likes of Granules India, Manappuram Finance, PVR Inox as well as RBL Bank. Good news in terms of fund flows. The foreign inflows were net buyers to the tune of 724 crore rupees yesterday, although net sell figure from domestic investors was somewhere around 1600 crore rupees or thereabouts. So all in all, that's the setup for today. Looks like we are in for a positive open. No big bang start, of course, but we can look for higher start this morning. But let me bring on board our technical guest for today then and understand the setup. Joining me is Ruchit Jain, who's the Vice President Equity Technical Research Wealth Management at Motilal Oswal Financial Services. Ruchit, great to have you on the show. First of all, congratulations for your new role at Motilal Oswal. We are interacting after a long time. How do you think the markets are poised? We have been fairly listless, as I was mentioning. But 24,700 to 750, is that the range you'll be looking out for today?
Yes, hi, very good morning, Nandita. Thank you very much. Well, if we look at the market's last couple of trading sessions, the index has been trading within a narrow range, and this 24,800 is a very crucial mark for the near term. Crucial it is because this is the 50% retracement level of the entire correction that we have witnessed in the month of October and November, and that 50% has not been surpassed on the closing basis yet. So, for a continuation of this positive momentum which we have seen of late, we need to close above the 24,800, which would open up the markets for another leg of up move towards 26,120, which is the 61.8% retracement. So for now, we are expecting more of a stock specific momentum and index to trade within this range of 24,800 to 24,500 in the near term. And we would wait for a breakout about 24,800 to initiate fresh longs on the index.
All right, Ruchit, what about the Nifty Bank Index? It was trying to stage a comeback from the day's low yesterday, but gave up most of the gains, 400 point off day's high, ended the day in the red. But of course, we have news flow. We have a new man, at the helm on Mint Street, changes galore, and of course, we've had a CRR cut as well recently. Nifty Bank Index, is the setup looking positive?
I think yes, the news flows is also positive. We can see that the new RBI governor is very well experienced and knowledged, and I think that will be taken positively by the markets. And even if you look at the banking index, and there was a consolidation in the index in couple of months of October and November when the broader markets were correcting. And although the trend was sideways, but this index was showing a relative outperformance compared to the broader markets. And that 52,500 has been broken last week itself. So I think overall trend for the banking index remains on the positive side. So maybe some of the private sector heavyweights which are there, and such as HDFC Bank is there, Kotak Bank is there, they would continue to show some relative positive momentum. Even SBI within the large cap PSU banking names, I think looks positive. So I think banking should do well relatively. 53,000, 52,800 is the immediate support zone. Till that is intact, it is advisable to trade with a positive bias in the banking heavyweights.
Okay, trade with the positive bias in the banking heavyweights. But since we are talking about banks, I can spot a query on our live feed coming in from Pooja. She wants to know which is a better banking stock to enter at current market price, SBI, PNB or ICICI Bank. These are the three options she is looking at. Would you choose any of these, or would you stick your neck out and say HDFC Bank is the best because of the fact that it has started outperforming and has been consistently making 52-week highs?
If he has to choose one, then definitely it would be HDFC Bank, because the stock has seen a long phase of consolidation where, irrespective of what we have seen in last 1.5, 2 years in the market, HDFC Bank was not performing, and now irrespective of market correction, we have seen a good buying interest coming in HDFC Bank after this consolidation phase. So I think the stock has resumed its uptrend. So although yes, it's not that high beta name where you should expect big moves in the short term itself, but a slow and gradual up move could be expected in the HDFC Bank, and this could be a relative outperformer. And of course, being a leader for the index as well, I think HDFC Bank would be more preferred.
Okay, HDFC Bank will be more preferred. Just looking at the indices in pre-open, we are looking at a gain of somewhere around 30 odd points on the Nifty and Sensex as well, 68 to 69 points higher in the pre-open. So as the GIFT Nifty is hinting, we are looking at a positive start. But let's talk about a Syngene. This stock will be in focus given the fact that sources are suggesting that Biocon is likely to sell 2% stake via a block deal in this particular counter, and indicative price is at somewhere around 825 rupees, up to 4.9% discount. to yesterday's close price. The size of the block deal would be somewhere around 660 crore rupees, and there will be a lock-in period of 60 days. Looking at the counter, hasn't picked up steam in the last 1 month or so. 5 sessions itself, it has shaved off almost 9%. How would you look at a Syngene today? And also since we are talking about pharma, what about some of the CDMO players like Divi's Lab, Laurus Labs? They were under a fair bit of pressure yesterday. Any kind of level that you'll be watching out for on some of these counters?
Yeah, first talking about Syngene, I think yesterday's correction has been backed by high volume. So I think we could see some sort of consolidation phase in the near term, and major support would be around 800 to 820 zone. So right now the risk reward is not that favorable. Maybe around 800, 820 would be good level to enter Syngene. And amongst the entire pharma basket, if we see, then no, I think the relative outperformance could be expected in certain stocks, no, such as Lupin is there or Sun Pharma is there within the large cap space. But overall, if you look at the pharma index, it's more into a consolidation trend. So we do not expect any run-up move in the pharma names in the short term.
Okay, that's the view on pharma, but of course, first ticks coming in on the opening bell. Very quiet start. We did start with a positive bias, but we gave up most of the gains, and now again we are trading with very mild gains, so no big moves. We are extremely flat at the current juncture. The Nifty at somewhere around 24,630 or so, and the Sensex as well at 81,000, around that 81,550 mark. But we are a little volatile because we are oscillating between gains and losses. The mid cap index as well is a bit quiet, although the advance decline ratio at open on the NSE is firmly in favor of gainers, 1400 advances to 600 declines. But let's see whether or not this sustains or not. In terms of sectoral movers, I want to see what the metal pack is doing at the current juncture, because on the back of the Chinese stimulus and the fact that they will be maintaining a loose monetary policy, this bodes well for metals. Trading with a positive bias, but no big bang moves at the current juncture at least. Barring the auto and energy pack, most of the sectors are trading in the green. And looking at the IT pack as well, yesterday at the fag end, on the back of the HSBC report, we saw a good up move coming in with Infosys as well, ending the day higher. Today, really, range bound moves at the current juncture. But as the day progresses, perhaps we could see some bit of traction in both the IT and metal names. Let's take a look at some of the individual movers then and see which are the stocks that are outperforming today. Even the top Nifty gainer is clocking in gains of just about 1% or thereabouts. So, outperformers as such. Shriram Finance, Apollo Hospital, BEL on the back of a 600 crore rupee order win in the green. Infosys extending gains from yesterday. Bajaj Finance as well, 0.5% higher. Some of the other IT names like HCL Tech doing well. ITC also in the green at the current juncture. What's not doing well, as I mentioned, some of the auto names continue to be under pressure. The likes of Maruti, M&M, Bajaj Auto, all under pressure. ONGC, Trent, Titan, Axis Bank, Reliance Industries was weak yesterday, today as well, extending losses. Dr. Reddy's, Tata Steel, these are some of the losers on the index. But Ruchit, coming to you, looking at the start, a fairly quiet start. We'll have to really wait and see whether there could be some bit of a breakout, so to say, wherein we can look at levels of 24,700 or not. But looking at the open, which are the stocks and sectors you'll be keeping on your radar today?
Yes, I think as we spoke that in last couple of days also, we have been more into a consolidation phase on the index. So that might continue for today's trade. If one more trading session as well before we see any kind of directional move. I think amongst the sectoral indices, IT clearly is showing a good outperformance since last some time, and that is indicating a continuation of this uptrend. We can clearly see some good high top, high bottom structure in some of the IT names. Many of the IT names are still trading around the 52 weeks high. Stocks such as Infosys is there, Wipro is there, Tech Mahindra is there. So I think these are all looking positive. So I think IT could be one space where one can continue to trade with a positive bias.
Okay, positive bias on IT today as well, doing well. But let's talk about some of the life insurers. Life insurance data came out yesterday. The November premium was down 4.5% on a YY basis. But if you look at some of the players who have done well, ICICI Pru, I think that stood out, given the fact that their November premium grew by 1.5 times on a YY basis, and even on an 8-month basis, the premium was up somewhere around 35% or thereabouts. The annual premium equivalent was up 2.7 times on a YY basis. So this looks like a clear outperformer, when it comes to the life insurance data. But within the pack, HDFC Life, SBI Life, they have been fairly, volatile, so to say. You've seen intermittent bouts of buying as well, and some days they would be under selling pressure as well. But within the life insurance pack, any stock that is catching your attention now, especially ICICI Pru, how would you look at that?
If we look at the insurance space, then last couple of weeks when the markets have shown a rebound, there has been no participation from no the insurance stocks. So I think overall the momentum is not looking that positive for the near term. Yes, the only stocks which are trading at support is the ICICI Prudential Life and ICICI Lombard, because both the stocks are hovering around their 200 EMA, while stocks such as HDFC Life is there or even SBI Life is there. They have already breached below their 200 EMA. So I think we need to be very selective. It doesn't seem that we would see any significant momentum in the short term. Maybe some consolidation would continue. A relative outperformance could be expected in names such as ICICI, Lombard, and Prudential.
What about LIC? It has slipped quite a bit, 2.5% down. Of course, if you look at the insurance data, not really enthusing, so to say. Premium was down 27% on a YY basis in the month of November, and the annual premium equivalent was also down 19% on a YY basis. LIC, would you advise averaging, or would you say steer clear of this one now?
I think a buy on dip strategy could be kept in the stock if one is looking from a bit mid-term perspective, not from a short-term trading perspective, because the stock has recently formed a good support base around that 880 to 900 zone. So price-wise correction seems to be limited from here. Any dips towards towards 900 or 930, I think that would be the range where the risk-reward ratio would become favorable to do some averaging. So for now, I think I would recommend buy on dip strategy for LIC.
Okay, a buy on dip strategy for LIC. Another stock that's in focus is Metropolis Health. It has made an acquisition, acquired 100% stake in Core Diagnostics for almost 250 crore rupees. The stock is, doing okayish, 1.5% uptick here. Done well in the last 5 sessions. We've seen gains of somewhere around 7% or thereabouts. Still some time away from 52-week highs, but is the trend looking intact? Is it heading towards its 52-week highs anytime soon?
I think as overall the diagnostic space looks interesting. Both the stocks, Lalpath Lab and Metropolis, has a good price volume action in last 2-3 trading sessions. In fact, we have even recommended Lalpath Lab to our clients to go long at around 3130, 3150 range. So yes, both the stocks in fact have good structure technically. So if one is looking from short to medium term, then one can look taking exposure at Lalpath Lab. Even Metropolis looks positive. Any existing long positions are there, they can continue to ride the trend.
Okay, that's the view on diagnostics. Things looking good and healthy for this particular space. But let's talk about the queries that are trickling in then this morning. The first one is coming in from Satya CK. Wants your thoughts on Emphasis. Of course, we spoke about IT stocks and the fact that this particular pocket is gaining traction. But Satya wants to know your thoughts on the short to medium term levels to watch out for on Emphasis. He bought shares at 3,000 rupees for 6 to 9 months. He wants to know the resistance and support levels on this one. Of course, there was an HSBC report yesterday. They have upgraded Emphasis as well. So any kind of resistance and support levels that he should keep in mind?
So we have spoken about the entire IT names that the IT space is showing relative outperformance that is likely to continue. And within that, if I look at the emphasis, then the immediate support for the stock is around 3,000 level. I think somewhere around is buy price itself. So 3,000 followed by 2,900. These are two supports. So entire range you can say 3,000 to 2,900 is a good support range for the stock. And if this remains intact, then positionally you can expect levels around 3,380 to 3,400 kind of range. So hold on to your existing long positions around 33.80 when the stock comes. That those would be good levels to take a review whether to book profits there or not.
Okay, that's the view on emphasis. Hope that answers your query. The next one is coming in from Maninder Singh. He wants to know the outlook for Bajaj Finance over the next 3 to 6 months. The stock is doing okay today, 0.5% uptick. But it has come off, right, from its 52-week highs. Last 5 days, it saw good traction. Even the last, 1 month has been okayish in terms of, the kind of recovery that it has made after seeing a bout of weakness. Here on 7,000 levels, should one keep that, in mind rather, from a short-term perspective?
Not looking no much of a trended phase in the stock. We have seen the stock has shown a relative underperformance within the NBFC space too since last few months. And major resistance for the stock is around 7,100, 7,150 kind of range. So until we see a breakout above this resistance zone, I think the upside seems to be limited, and rather we would see more of a consolidation or a time-wise correction phase in Bajaj Finance in the short term.
Okay, that's about Bajaj Finance then. But let's talk about the jewelry space as well. A couple of these stocks have been doing well. Case in point is Senco. It has been witnessing delivery-based buying as well, and of course, we are at the threshold of the wedding season, which bodes well for jewelry names. So within the jewelry, space or the stocks, Kalyan Jewellers. There's a query on this particular name from Naveen. How would you look at that? And Senco, next levels to watch out for there?
So yes, I know this space is quite interesting because the last few trading sessions we have been witnessing a good stock-specific buying momentum in this space. So Kalyan Jewellers is looking positive. There is a high top, high bottom structure. It just needs to take out that previous swing high of September, which was around 785, 786. And once that level is taken out, so I think we could see some good momentum or performance in Kalyan Jewellers. And even Senco Gold has been more into a consolidation phase. If the stock gives a breakout above that 1,200 mark, I think a closing about 1,200 would see some fresh buying interest coming in the stock for a potential targets around 1,350.
All right, that's about Senco Gold. But saw a query from Satvika Ranganathan. She had a few queries on railway stocks like IRCTC and Titagar. Is it a good time to get in to some of these counters, because they have seen quite a good correction from highs, right? Phenomenal run, then a 30 to 40% kind of correction from the highs. Post this correction, is the risk reward looking attractive for some of these names?
Not from a very short term perspective, because the stock has also been underperforming in this recent pullback move. If you notice, right, we have seen a good broad market based pullback in last couple of weeks, last 2 or 3 weeks, but there has been no participation from the many of the railway names. So I think when the market is showing a pullback and if these stocks are not witnessing fresh buying interest, then that is a bit of concern for me. So I would wait for a clear breakout in Titagar wagon about 1,250. Closing about 1,250 could be positive for the stock from a momentum perspective. But otherwise, I think these stocks, since they are showing relative underperformance, in phase of pullback moves, so I think we could see some more time-wise corrective phase or consolidation going ahead.
All right. Before I take up more queries, what would you do with some of these FMCG names that saw some bit of hammering yesterday? Especially the likes of Godrej Consumer, that was down 9%. It dragged down stocks like HUL, Nestle, Tata Consumer, all of them. How would you approach some of these FMCG names? Is there a new bearish trend emerging on the charts now for some of these names?
Yes, a clear bearish trend is there in the FMCG stocks. The index itself has been forming a low top, low bottom structure, which indicates there has been no buying interest in the stock. And after that news flows, which we saw negativity in yesterday's trading session, I don't think no market participants would be in a hurry to do any kind of bottom fishing unless we see some positive data coming out no, for FMCG companies. So I think for now it's better to avoid FMCG names. No, let the dust settle down. Let there be some confirmation of a bottoming out process. I think then one can look for some stock specific activity. But as of now, there are no signs of positive reversal in the FMCG names.
And since we're talking about consumption and FMCG, what about in Asian paints? We have a query coming in from Shyam Sundar, and he wants to know your thoughts. Today it is seeing some bit of a recovery, mild rebound, but the stock has been stuck in a clear downtrend, a 19% downtick on a 6-month basis. Within the paint makers, anything that's catching your attention?
Well, I would recommend still holding Asian Paints. Yes, the stock has been a big underperformer in last 3 or 4 years, but I think more or less the corrective phases, indicates that the downside now seems to be very limited from, at least the price-wise correction seems to be limited from here on. If I'm looking at a bit longer-term chart, then the RSI oscillator is in oversold zone. Even the stock is trading quite near to its 100-day exponential moving average on the monthly chart, 100 EMA on the monthly chart. So I think better to hold on Asian Paints for now. Yes, there are no signs of short-term reversals, but these are not the levels where one should think of exiting Asian Paints.
Okay, hold Asian Paints, that's the call. But a query coming in on Borosil Renewables. This one is coming in from Alex, and he wants to know what one should be doing with this particular stock. The stock has seen a very good run. I think in the last 1 month itself, it has gained somewhere around 20% or so. Would you recommend booking profits here, or would you say stay put in it and perhaps look at accumulating more on dips? How should one go about their holdings?
I would say hold on existing positions. The stock has potential to rally towards 650 mark in the near term itself. In last 1 week, we have seen that the price of move has been supported by rising volumes, which is a good sign. So if any existing long positions are there, they should hold on. Definitely in last 1 week, the stock has already rallied from 450 to 600. So the risk reward ratio for fresh buying is not that favorable because the stop losses are too deep if we buy at current levels. So if any dip comes, then one can use those dips as buying opportunities. So buy and dip approach can be kept for fresh entries, whereas any existing long positions can be held on.
Okay, that's the view. I want to take up another query. This one is on Dixon Technologies. This one's coming in from Anunay. He has bought Dixon Tech shares at 14,799. He wants to know whether he should hold book profits or what really should he be doing, and his time horizon is 1 year. He's made good profits here. The stock is rubbing shoulders almost with its 52-week highs as well. Just about, it's still some time away, 400 rupees or so. Should he wait it out or should he book partial profits?
I would recommend to continue to hold on. This is one of the stock which has created wealth over last few years, and still there are no signs of reversal. And even if you look at the recent corrective phase, then most of the stocks which had rallied very significantly has seen some retracements or pullback move, but there has been no sign of weakness in no Dixon Technologies and any kind of dips that are coming that are being bought into. So I think have some patience. I think this is one stock which could still give good returns from current levels. So I would recommend to continue to hold on the stock.
Okay, hold on to Dixon Tech. Anunay, hope that answers your query. Last couple of queries then. This one is coming in on Indocount Industries. Anant Swaminath wants to know your thoughts for the short to medium term, whether he should hold or exit. And if he should exit, at what level? That's what he wants to know. Indocount Industries, if you track this one, the stock is up 16% in a matter of 5 sessions.
So I think many of the stocks from this textile sectors have seen good buying interest in last few days. Indocount Industries also yesterday's up move was supported by good volumes, which indicates no good momentum in the stock. So can hold on. For potential targets around 440, 440 would be the levels where no one can take a review on this stock.
Okay, then that's the view. The last query really is coming in from it's on Inox Wind. It's coming in from Mohammed, if I can read it correctly. And any thoughts on Inox Wind, where it's headed from current levels?
So overall trend is positive for Inox Wind. So I think if money is holding long positions, then they should continue to hold on. And no, the 200 EMA around 180, 175 is a good support range for the stock. So if this remains intact, then we could again see a slow and gradual up move 240 to 50 kind of range.
All right, that's the view. Hope that answers your query. With that, we've come to the end of the query segment. And Ruchit, would like to thank you for taking out time and joining in this morning. And I look forward to interacting more often with you here on.
Thank you, Nandita.
Thank you. Well, before we move on and bring on board our next guest for today, just quickly take a look at the markets. No big moves, no, trend emerging at the current juncture, just about 10 points higher on the Nifty, although the mid-cap index has slipped into the red. Well, then on that note, let me bring on board our next guest for today. Joining me, Sushant Bhansali, who is the CEO at Ambit Asset Management. Sushant, great to have you on the show here. Before we talk about the market, let's talk about the big development, right? We have a new man at the helm of Mint Street, Sanjay Malhotra. Of course, outgoing Governor Shaktikanta Das has done a phenomenal job steering the Indian economy through some of its toughest crises like the pandemic, and he leaves behind a solid legacy. However, Malhotra is taking charge at a challenging time. Heightened global uncertainty, inflation is surging back above 6%, and growth is slowing down. That's a daunting landscape, really, so to say. His task, clear: navigate a delicate balancing act to maintain stability and foster growth. Your thoughts, as to how this will be digested, given the fact that one section of the market was thinking that perhaps Shaktikanta Das's tenure will be extended by at least a year. Your thoughts?
Sure, I think it's a routine appointment and again another bureaucrat from the government, and especially with the wider experience as well, similar to Shaktikanta Das. So it's a great move by the government to ensure that new sort of thoughts come in at regular intervals, and challenges will always be there in the macro. And thankfully, there are not too many big challenges, especially geopolitical challenges, to deal with at this point of time for the governor. So can't have a better start compared to what it was 3 years back. The pandemic threat is all fully over. The economy is, I would say, doing reasonably well. Of course, we don't have tailwinds post-COVID, which we have for the last couple of years between 2021 and 23. But I think it's a good time, and new thoughts will come in. RBI as such is a great institution and has a great, I would say, organization with lots of support. So the new governor, I think, I will have to prioritize what his thoughts and priorities are for the next few months, and then accordingly take the helm at the thing.
Right. Governor Shaktikanta Das's parting shot was a 50 basis point CRR cut. Do you think the stage is set for a 25 basis point rate cut, repo rate cut in the coming policy? And do you expect the rate cut cycle, in 2025 to be a little more shallow? And what is the quantum of rate cut that you would be expecting for the entire year?
Sure. So I think given that we didn't have the rate cut so far, while in the US the rates have been cut already a couple of times, and we're expecting more rate cuts in 2025 there. So hopefully the same trajectory will follow in India, and first few meetings I think will have rate cuts in them, element in them. Probably to begin with the 25, but probably even 50 bips will not be a big surprise. The inflation is not out of control. I would say it's on borderline. It will always be up and down, but it's, I would say, around the comfortable zone of RBI. And I think the CRR cut will be able to provide good liquidity in the market because somewhere I think liquidity was getting squeezed in the market for the last few weeks, probably pre-Diwali and around that. So CRR cut will definitely help sort that out. And the new governor will have enough time for his next monetary policy to figure out his thoughts and action plan for the new year. But the rate cuts, I would say that we'll expect at least 50 to 100 bips over 2025, depending on how the data comes. It will be navigated in that manner between first half or second half of 2025. But certainly, 2025, we should see somewhere between 50 to 100 bips lower than where we are today.
Got it, Sushant. How are you looking at banks post the CRR cut? Do you think the CRR cut will translate into, some bit of margin expansion on an immediate basis, or do you think that will take some time to happen? Because margins have been an area of concern for banks at a time when asset quality, is pretty solid. So here on, you have seen banks like HDFC Bank taking the lead now. Of course, we won't be talking stock specific, but within the private and public sector banks, which one would you prefer? And valuations wise, where do you see more headroom?
Sure. So definitely, I think the CRR cut will have immediate, I would say, impact on the margins because we are now able to lend more than previously. So definitely, margin kicker will be there. Rate cuts always take a bit of more time for the profitability to adjust. But CRR liquidity measures definitely will add to the margins because you are able to now give more advances compared to keep more investments on the balance sheet. Regarding the public and private sector, I think we are right now more bullish on private sector banks, given that the economy is now sort of only reasonably and not in full enthusiasm. There will be cutthroat competition, and private sector banks probably will be better placed. The rates cycle is at a curve where there is no significant advantage for public sector banks compared to private sector bank. And also now with liquidity measures, the private sector banks will have probably more growth and expansion at their hand. And valuations as such for private sector banks has not done meaningfully well for most of them for the last 3-4 years. So there is lots of headroom. And as global investors come in, the private sector banks will be the preferred place for them. Probably 1 or 2 public sector banks. So the leaders will definitely get some attention as well. But private sector banks definitely will be the flavor for most of the global investors.
All right, private banks better poised versus public sector banks. But talk about the markets as well. We're just about 5% away from record levels. We did see a good 10% correction, but we've recouped half of the losses now. Here on, how would you approach the markets? Would you say that the current levels are fair and a bottom is already in place, or would you say that 2025 in fact could be a year of more headwinds rather than tailwinds? How would you look at it, and where do you think the markets to head from here on?
Tailwinds of liquidity, I think, in the market will continue. The culture of equity is developing really well in the last few years, and that will continue in 2025 and probably many more years beyond that. So the liquidity supported the market, which is why the markets are not probably getting much below 10-15% correction over the last 3-4 years. You will see that phenomena should continue. The only headwinds we are worried about are the earning growth trajectory of corporate India. It has been, I would say, slightly reducing over the last few quarters, and the sales growth has been under pressure as well. And if that is not sorted out, I think it will be more polarized. The market at a level like index level probably will not have big drawdowns. But individual companies, I would say, will face a lot of large drawdowns. So we have seen in this cycle also, while the market didn't correct, there were many companies which corrected 2x and 3x of market corrections and have not recovered that well as compared to how index has recovered. So 2025, I would say, will be a year for stock pickers. And concentrated portfolios will deliver much better than diversified portfolios. So definitely it will be worth watching market and invest into, I would say, if you have to align your portfolios, align your portfolios in a manner where earning growth is still quite stark and not getting weakened.
Hmm. One pocket that will be in focus once again would be the FMCG pack, right? We saw what happened with Godrej Consumer, a surprise mid-quarter update, and it was kind of a rude shock, so to say. And we saw it play out in stock prices as well. Even the heavyweights like HUL, felt the pinch. But this whole urban consumption slowdown thing, do you think it is going to persist for a couple of more quarters? Of course, higher input costs and prices have taken a toll for some of these names, and we've seen that play out in the volume growth as well. What would you do with FMCG now? Would you go for the valuation comfort that perhaps they could offer after the correction, or would you say that let earnings recover and only then take a call?
So I would say FMCG companies are one of the most efficient players in the country. And when the economy is not doing very buoyantly, then these companies, most of them will, I would say, deliver earning growth, which is much healthier. Their ROEs, ROCs are always much better because of their capital efficiency and asset turnover. So I would say 2025 will be a good year for FMCG. I think growth will come back some point of time. There have been increasing headwinds for the FMCG sector, especially on the urban side, from smaller niche players, regional players, which have done really well over the last 1 to 2 years, and thereby the growth didn't turn out as was expected. But now with the economy slowing down, I think the pricing power of these FMCG companies will be at play, and they'll be able to offer better margins given their scale of economy. And that's why I would say that most of the FMCG companies should do well over the 6 to 12 month period. Immediate 1 or 2 quarters is very difficult to say. That will more depend on short-term phenomena in terms of growth rates on a monthly basis. But on a 6 to 12 month year, 12 month basis, I would say FMCG companies will be a good should be a good part of the portfolio for the next year.
And what about quick commerce? That's been a hot space. What is the kind of growth opportunity you see for this particular space for the next 2 to 3 years? We have a new, listing, in fact, recent listing, Swiggy. How is that placed since you have Zomato that has already taken the early mover advantage, right? Is the valuation gap between the two, Zomato and Swiggy, expected to narrow down further? What is your take?
So Zomato was not the first move. I think it came after Swiggy Instamart, but I think they really made it big. Came out, they were like underdogs, but came out big and became the larger player in the segment. As we see, there is lots of competition in this segment. Not just the top three, which are the two listed players, as well as Zepto, but I think the lines are getting blurred between e-commerce and quick commerce, and probably ready delivery in case of other players like the Big Basket, DMart, all of these players. I think all of them are probably trying to make some business out of quick commerce. Convenience is probably more for metros and top 5, 7 cities at this point of time. But over the next 5, 10 year period, I think convenience will flow through to probably the top 200 cities in the country as well. So there's a big opportunity, but cutthroat competition. Capital is now again readily available from this segment because the players have been able to get great growth without losing too much money. It has not been a discounting game the way it was when e-commerce developed in the country 10 years back. So the players, I would say, have been more sensible. But given that competition is turning up every passing month, I would not be surprised if more and more discounts keep on coming and the margins get shrunk in this category for a short period of time.
All right. Last question, really, Sushant. You mentioned from a 12-month perspective, FMCG is a good investment bet. But with a 2 year perspective, any other sectors that one should be invested in as they recalibrate their portfolio for the coming year?
I think IT services should do well alongside FMCG and banks, which we discussed. They should do really well. And somewhere chemical companies, I think, are making a comeback as well. So these are the few sectors which I think we are right now positioned. Otherwise, as I said earlier, it will be a stock pickers market. So sectoral trends will not mean much. One should be more focused on the leaders in the sector, so probably companies who are able to use their pricing power and use them to pick the stocks wherever earning growth is visible in the next 2 to 4 quarters versus think more long term if you have to make money in 2020.
All right, that's the view then. With that, Sushant, would like to thank you for taking our time and joining in. And in case we don't interact before the year ends, wishing you a very happy and prosperous new year ahead.
Great year in 2020. Thank you.
Thank you. Well, with that, we've come to the end of this edition of Opening Bell. The markets are extremely flat, but the broader end of the markets have snapped out of their gains. In fact, they have broken out of a 12-day gaining streak as we speak. But let's see, we still have a full trading day ahead of us. Who knows where we end the day? But extremely flat on the benchmarks as well as the broader end of the markets. Leaving you with that. Come back and join us on closing bell at 3:30 p.m. where we take stock of the market close as well as some of the stocks that will be on our radar this afternoon. Signing out then. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.